What if I told you
Most of the money you think exists is fake, not counterfeit, not illegal, but created out of thin air by banks with a few keyboard clicks. And every time they do it, your savings quietly lose value. You work harder, you save more, you do everything right, yet somehow you feel poorer every single year. That's not bad luck. That's not a random cost of living crisis. That's the system, doing exactly what it was designed to do. Today, on Financial Exposed, we're going to expose how banks create fake money, how that process silently destroys your savings, and what people who understand this system do differently. Stay till the end, because once you see how this game works, you will never look at your bank account or your future the same way again.
Let's start with the big lie.
You were probably taught about money. Most people believe something very simple. You put your money in a bank. The bank keeps it safe. And then, the bank lends that money to other people and businesses. Sounds logical, sounds fair, sounds safe. But that picture is wrong. Banks do not just take your deposit and hand it to the next borrower in line. Banks don't simply move existing money around. Banks create new money.
Let's make this painfully clear.
When you deposit $1,000 in a bank, you imagine a big vault somewhere, with a digital box that has your name on it. Your money is stored there, waiting for you. Safe. That's not what happens. Your deposit is not sitting in a box with your name on it. Your deposit becomes raw material for the bank to create much more money out of nothing. This system has a name. It's called fractional reserve banking, and it is the foundation of the modern financial system in the US, the UK, and most of the West. Let's see how it actually works. Imagine you walk into a bank and deposit $1,000. On your banking app, it shows plus 1,000. You feel good. Your money is there. Behind the scenes, the bank looks at your deposit and says, "We only need to keep a fraction of this as reserves." In the old textbook version, that fraction might be 10%. In reality, for many modern banks, effective reserves can be even lower, sometimes close to zero, because they rely on central banks as backup. But keep it simple. Let's say the bank decides it will hold 10% in reserve. That means from your $1,000, they keep 100 aside, and they are allowed to lend out 900.
Now here's the crucial part.
When the bank gives someone a $900 loan, they do not go to your box in the vault and physically take out your cash. They simply type numbers into a computer. They create a new deposit in that borrower's account. That $900 did not exist before the loan. It is new money, created with keystrokes. Your $1,000 is still sitting in your account. The borrower's $900 is now sitting in their account. On paper, there is now $1,900 in the system, backed by the same original $1,000. Then, the borrower takes that $900 and spends it. Maybe they pay a contractor, maybe they buy equipment, maybe they purchase a car. Whoever receives that money often deposits it into another bank.
Now that second bank
Treats that $900 deposit exactly the same way. It keeps a small fraction as reserves and lends out the rest again. Maybe it keeps 90 and lends out 810. That 810 gets deposited somewhere else, and the process repeats. Over and over. Loan, deposit, loan, deposit. From your original $1,000, the banking system can create many thousands of dollars in new money. No new gold, no new real asset, no extra productivity magically appearing. just numbers, multiplying inside a digital system. And here's the part that most people miss. This is not a bug. This is not some side trick. This is how modern money is created, legally, every single day. Now you might ask, so what? If everyone's balances go up, if there's more money in the system, why should I care? Because this money is not backed by real value, and that has a direct, brutal impact on your savings.
Let's talk about why this money is
Fake. When we say fake money here, we don't mean counterfeit bills printed in a basement. We mean money that is unbacked. Money that exists only because a bank decided to create a loan. It is not backed by gold. It is not backed by a fixed amount of real assets. It is not even backed by past productivity. It is backed by debt. Every new dollar a commercial bank creates comes into existence as someone's loan, which means something very uncomfortable. For money to exist in this system, someone, somewhere, must be in debt. Think about that. The entire system depends on people, businesses, and governments constantly borrowing. If borrowing slows down, if people refuse to take on new debt, the creation of new money slows down too. And when that slows down, the whole machine starts to shake. That is why every time there's a recession, governments panic. That is why central banks slash interest rates towards zero. That is why they step in and create even more money at the top. Because if new debt doesn't enter the system, the illusion starts to break. So how does all of this come back to you? Sitting with a savings account, maybe some cash, trying to be responsible. Here's where the pain shows up. When banks create new money, the total amount of money in the economy goes up. But the real stuff in the economy doesn't grow at the same speed. The number of houses doesn't suddenly triple. The amount of food doesn't suddenly explode. The amount of land, energy, materials, all move much more slowly. So now you have more money chasing the same real things. What happens? Prices rise. That's inflation. Inflation is not just, oh, things are getting more expensive. Inflation is, the value of each unit of money is falling because more of it was created without equal real value behind it. Your savings don't vanish overnight. They're being watered down. Imagine you have a glass of milk. Good, thick, full milk. Now imagine someone keeps pouring water into it, little by little. Not enough for you to notice at first. The glass is still full. It still looks like milk. But sip by sip, it becomes thinner, weaker, less nourishing. That's your savings. On the screen, your bank balance might still say $10,000, or $100,000, or $1 million. But what that number can buy in real life is shrinking. If your money loses just 7% of its purchasing power every year, in about 10 years, it loses roughly half its real value. Half. You didn't spend it, you didn't gamble it, you didn't mess up. The system diluted it. You put money aside, but it never seems enough. Saving feels pointless. Your money is being taxed without a tax bill. Economists have a polite name for this. They call it the inflation tax. At Financial Exposed, we call it what it really is: legal theft. Because if a stranger took 7% of your money every year, you'd call the police. But if the system takes 7% of your purchasing power every year through inflation, you're told it's normal. Here's the next question. If this is hurting you, who is it helping? Because someone is winning this game. Inflation punishes savers, people who hold cash, people who trust their bank accounts. But it quietly rewards borrowers, especially big, powerful borrowers. Banks, governments, large corporations, and people who own real assets. Banks are at the front of the money creation line. They create the new money. They lend it out first. They earn interest on it. By the time that new money spreads through the economy and starts pushing prices up, they've already benefited. Governments benefit too. They borrow huge amounts of money. They run deficits. They issue debt. If inflation stays high, the real value of that old debt shrinks over time. They repay with money that is worth less than the money they borrowed. You repay your debts with your sweat and your time. They repay with devalued money. There's a name for this pattern. It's called the Cantillon Effect. It means those closest to the source of new money benefit first. Those farthest away pay the price. At the top, newly created money flows into stocks, real estate, financial markets, corporate buybacks, speculation. Asset prices go up. If you already own assets, you look richer on paper. If you don't, you're stuck watching the elevator leave without you. That's why the rich often get richer during periods of high money creation and inflation. And that's why sitting on cash makes you poorer in real terms, even if the number doesn't change. Quick question. Does this match what you feel in your own life? Rent rising, food rising, your salary trying to catch up and failing? If it does, type rigged in the comments, so I know you're seeing what's really happening.
Now you might be thinking,
If this system is so destructive, why don't they just stop? Why don't central banks and governments simply stop creating so much money? Because they can't, without triggering something worse for them. Governments across the West are buried in debt. Trillions upon trillions. To keep that mountain of debt from crushing them, they need two things: interest rates that are not too high, and inflation that quietly erodes the real value of what they owe. If they suddenly stopped creating new money or allowed interest rates to spike, debt would become unpayable. Businesses would fail. Housing markets would crack. Financial markets would crash. Unemployment would explode. The system would go through a violent reset. No politician wants that on their watch. No central banker wants to be blamed for that. So they pick the slower, quieter option. They choose inflation. Not hyperinflation that causes riots overnight, but steady, background inflation that people learn to live with. Instead of a visible crisis, you get confusion, anger, blame, pointed in every direction except the design of the system itself. People blame greedy companies. They blame immigrants. They blame lazy workers. They blame foreign countries. Almost no one points at the money machine. That's the brilliance of it. The damage is real. The cause is invisible.
and what does this do to your future?
This is not just about this month's rent or this year's grocery bill. This is about your ability to plan your life. Inflation quietly attacks. Retirement savings, pensions, fixed incomes, long-term goals. If your money loses 5 to 7% of its power every year, in a decade, half of what you thought you had is gone, in real terms. You might be working harder than your parents ever did. You might be earning more on paper than any generation before you. And yet, buying a home feels impossible. Raising a family feels terrifying. Retiring with dignity feels like a fantasy. You're running on a treadmill that keeps speeding up. Work harder. Save more. Cut back. Be responsible. And still, you fall behind. Not because you're lazy, not because you're bad with money, not because you failed at life, but because the game is rigged against people who trust the system. blindly.
So what do people do when they finally understand this?
This is not financial advice, this is financial awareness. People who see how the system works tend to change their behavior. They stop treating a savings account as a long-term wealth strategy. They avoid holding large amounts of idle cash for long periods. They start paying attention to how money actually flows through the system. They learn about assets, inflation hedges, cash flow producing investments, real things in the real world. They study financial history. They study past currency crises. They study how people in other countries protected themselves when their money was diluted. The goal is not to beat the system in some magical way. The goal is to stop being crushed by it, to move from being the last person holding devalued cash to being someone who understands the rules of the game. Because here's the harsh truth. Banks don't usually steal your money by walking into your account and taking it. They do something far more powerful. They change what money means. They turn your time, your energy, your effort into digital numbers. Then they turn those numbers into debt, and that debt into control. As long as you don't understand how this works, you will keep blaming yourself for a game that was never designed for you to win. Now, you know, and knowledge is your first defense. If this video opened your eyes to how banks create fake money and how it destroys your savings, make sure you subscribe to Financial Exposed. We don't sell hope, we expose truth. Comment "fake money" below if you finally understand why saving cash can feel like losing, even when you're doing everything right. And share this with someone who still thinks their money is safe just because the number hasn't changed yet.